Welcome back to those who had joined us yesterday and today for the fifth edition of NAREDCO and APREA's Real Estate and Infrastructure Investors Summit 2020 with Anarock as our knowledge partners and supported by Primus Partners. I would like to thank our sponsors led by State Bank of India, without whom this summit would not have been possible. We saw the culmination of day one with the Secretary at Ministry of Housing and Urban Affairs, Shri Durga Shankar Mishra ji, joining us despite his health. He announced that the implementation of new Model Tenancy Act will release over 10 million vacant houses locked in the clutches of old Act. And this will help to promote real estate investments in the sector. Well, he also urged the states to reduce stamp duty, which will help foster economic growth. Before we kick off day two, I would like to remind the attendees to type their questions in the chat box for our moderators to take up if time permits. And also please mention your email address, because if your questions are unanswered, we can get back to you with your answers to the questions. I'm so pleased to welcome our opening speaker of the day, Mr. Anuj Puri, Chairman and Founder of Anarock. Well, Anuj needs no introduction as he has over 30 years of experience in Indian and global real estate markets. He's a trusted advisor to developers, occupiers, investors, and the government. We are very pleased to have partnered with Anarock. Rajanji, would you want to say a few words before Anuj opens, or Ashokji?
See, Anuj has got a new name. He's a liquidity master now. because for developers, investors are tied up, NBFCs are into one problem, and banks don't give funding. So today he has the key to liquidity. So each and every developer, or even for that matter, home buyers also today, they know Anuj very well. And Anuj is a veteran who knows this industry in and out. So I think without giving much more time to the people, because people are interested to listen to Anuj rather than both of us. So I hand it over to Anuj, and a warm welcome to Anuj, as well as once again Sigrid, a warm welcome to you also. And Jyoti Prakash Gadia, a warm welcome to you also, sir. Over to you, Anuj.
Thank you very much, Rajan, and thanks, Neetu, for the kind introduction. It's fantastic to be here on day two of APREA NAREDCO. Neetu, you particularly do a fantastic job. I mean, there's a lot of hard work that goes in. I'm sure with the help of Rajan and Ashokji, this is going to be fantastic. I'm looking forward to being here for the day. I also think, as Neetu, the way that you've done the format is fantastic. Get in half a day. That's the concentration on digital that you can get in. You have a superb lineup of speakers and very, very eclectic topics. So looking forward to having an invigorating discussion over the next 3 to 4 hours. The topic is very interesting of this conference, real estate and infrastructure. And on the infrastructure side, I was just looking at some of the data points that the government of India has released. And clearly there is $1.4 trillion of new investment that is going to go onto the infrastructure, and in a lot of sectors. Whether it's the UDAN scheme, which is nothing other than having new airports. There are 100 new airports that are lined up in India, whether it is the road infrastructure, and the road infrastructure, I was looking at some of these data and comparing it. It is at this moment in time, the construction activity that is going on, it's the largest road infrastructure that is being created in the world. Whether it's the metro that is being created, I mean, that metro is nearly 1,500 kilometers, and I was comparing it with the London metro, which is 400 kilometers. So we are doing nearly 4 times the London metro. And that's where I feel is that this is a fantastic opportunity for overseas investors, funders to come in and invest into the infrastructure in India. Also, the government has taken fantastic steps on making sure that ease of doing business is very much there, and thereby ensuring that there is a good ability for the foreign investors to be able to come in into this sector. What is interesting is the second part of the topic that we will discuss, which is the real estate. For many, this is a segment that has been beaten black and blue. I can actually tell you is that during this pandemic, this segment has done better than what it was going into the pandemic, particularly for players who are financially disciplined. There has been corporate governance, there has been delivery focus, and there has been an assurance that they have taken care of their home buyers. On the commercial, for a lot of the industry players, it seems that this is down and over with. But it'll be interesting to note that even in this year, we believe nearly 23 million square feet of new office leasing is going to get done. It's less than, it's lower by 50% from last year, but still 23 million square feet is huge. And some of the data points you were to look at, Wells Fargo took 1.1 million square feet last week. Amazon, Ola, Mazarek, all these guys have taken very large spaces in the last few weeks. So clearly work from home is working for a few industries, few segments, few sectors. But I think overall people do want to get back to the office. They want areas for collaboration, areas for innovation, just pure gossip, on lunch table to be able to do that. And we're seeing is that many people are missing coming into the office, and the corporates have realized that they will need to get back into the office. Equally, Sigrid, when we look at the REITs, I mean, it has been fantastic. The Embassy Blackstone REIT is performing very well. During this pandemic, we had the listing of the Mindspace REIT by Rejas, which was nearly 14 times oversubscribed. I mean, it started and ended at the peak of the pandemic with 14x oversubscribed. I mean, that is what the appetite you can see. Hopefully, in the next few months, we're going to see Brookfield come out with the REIT, and we believe there is another 300 million square feet of office space that is ready to be REITed. We feel this is a segment that will continue to attract huge amount of foreign investment. And I would like to thank APREA, in particularly Neetu on this one. She's been championing it from day one. I remember from the time when Paul used to be there with APREA, that is when they started, and with the help of NAREDCO, they got access to the government and ability to put the framework of the REIT, which has been so successful today in India, attracting billions and billions of dollars into this. What is exciting is the last point that I would say is on the commercial is that the rent collection has been between 97% to 99.5% during the period April to October, which was the peak of the lockdown. And the corporate occupiers have behaved beautifully, and that has done well. I think on the residential side, a lot of the people thought that this is sort of done and over with. We're just finding very interesting data. The Q3 sales are nearly back to 67% of the Q1 sales. I'm not even comparing it with Q2 sales because Q2 was absolutely a lockdown. So I'm comparing it to January to March 2020 and then July to September 2020, and we are at 67%. But what is more interesting is when we really dug deep into the festival season that has just got over, which is Diwali. And just before Diwali, there is a day called as Dhanteras. Dhanteras is when you really go out and do the buying of gold, houses or assets. We saw that compared to last Diwali to this Diwali, we are at 83%, which is like pretty quick that we've been able to come back on the residential sales. The number of units that were sold is 83%, whilst the sales value is 72%. That means that the affordable is selling a lot more in India. Having said this, I would say is during the 3 days that we're having the NAREDCO APREA conference, one of the factors that I would like to highlight is the lack of private equity in the residential segment. Unlike in the commercial, where I was very bullish and said it's billions of dollars of private equity that is coming in, billions of dollars of money from overseas financial institutions is coming in on the listed space for the offices. In the residential, what is lacking today is the liquidity. Exactly what Rajan said in his opening remarks, that there aren't those many lenders, whether it's the non-banking financial corporations or the banks or various other lenders who are becoming more and more reluctant today in funding it. And hence the need for the sector to be able to get in more private equity is going to be important. And that is where I feel is that we should be having a meaningful dialogue with the government to say is that how can we bring in more foreign institutional investors? How can we ease some of the rules for these foreign institutional investors to invest in residential in India? But that segment, far from being sort of down and out, is flourishing. The last one I would quickly touch in sort of 60 seconds is the excitement on warehousing. Industrial data center doing phenomenally well. There's again billions of dollars that is chasing this segment, particularly the data centers. We're seeing a number of the international operators on the data centers backed by private equity who are coming into India, and that is because of the sponsorship by the government of India to say is Data Protection Act means that all the data of the people of India needs to be stored in India itself. That means that data center will all need to be in India, and that's where we are seeing a number of the data center operators coming in with large equities into this segment. So that's very quickly on a little bit on infrastructure and a little bit on real estate. I'm very excited and I look forward to the days proceeding as we roll on. Thank you very much, Sigrid. I hand it back to you.
Thank you so much, Anuj. That was a great setting of pace with many numbers being thrown in. I'm sure it's going to get lapped up, especially the 1.4 trillion US dollars investments that are slated to go in infrastructure. Thank you so much, Anuj. Do continue to join us for the upcoming sessions. And without much ado, I would like to invite Mr. Jyoti Prakash Gadia ji, who's the Managing Director at Resurgent India, and he will help to help the developers understand the credit appraising techniques used by banks and the changes that have come about. Over to you, Jyoti ji.
Thank you, Neetuji. Thanks, Pera, NAREDCO, everybody, for inviting me all here. It was an exciting thing, and the way that you all have saved Rajan bhai, जिस हिसाब से आपने इस event को save किया, it is excellent, Rajan ji. मतलब in terms of you, the way that event has come up, the way that it has, you are taking the real estate voices also that much there. But Rajaji, that the way that you have told in the starting point, that is the trigger point that money is not coming to the real estate sector per se as such. So I will just like to pinpoint in my PPT there, I'll just share it and then we can take it up. That where the money is, why the money is so important for the real estate sector, and is this PPT now visible, Neetuji?
It is.
Yes.
So first of all, let us understand that why money is so important for the real estate sector. So just to give you the example, if we are investing 1 rupees into any of the industry, तो हम लोग 1 रुपया invest करते हैं, तो हम लोग कितने रुपए की business की बात करते हैं? Just talking कि if we are investing 1 rupees in the iron and steel industry, we are talking about the revenue or the business of 1.3 rupees. Same if I am investing 1 rupee into the textile company, I am talking about the business of 3.19 rupees. If I am investing in the auto, 1 rupee, I talk about 4.5 rupees ka business, I will speak about that way. In the infrastructure space, that goes up to 9 rupees. In NBFC, which is basically the money, where the money is the raw material and money is only the finished product that way. If I am investing 1 rupees in NBFC, I talk about around 19 rupees of business doing together. But whereas in the real estate, if I invest 1 rupees, I end up talking about 22 rupees as my business that is going to be generated, or I'm talking about that much amount of a volume. And it can also be taken from the fact that in case if I'm investing 1 rupees into the business, into a joint venture project, suppose if it is a 1000 crore land and the sale value is around 5000 crore, I invest around the 50 crore rupees into the project, and I talk about the 5,000 crore project cash flows which I'm speaking about. So that's the importance of money. So whether the real estate industry is basically cement, bricks, or it is basically the money business. So this is the figure that can give you the chart that real estate is maximum. It is the money business. How you control the incoming money and how you control the outgoing money. So let us understand that why the money which was coming to the real estate sector 2-3 years before, and this last 2 years only, the money has little bit becoming little bit difficult for the real estate sector to come in, particularly into the residential sector. So let us understand that why it was coming 2 years before, and what are the lacuna that the money is not coming right now, and what we could do to change this, and how we should evaluate the things. In a typical cost of the project, if you talk about 100 rupees cost of the project, this is the typical the costing parameters which are there, which is the land cost, government dues, construction cost, administrating and marketing cost, and the interest cost is around 8% of the dues which is there. So, this constitute around 100% of my of the cost of the project which is there. And typically, this cost of the project of 100 rupees is funded in this ratio, where promoter bring in around 15% of the project cost, the term loan or the bank or the FDI money or the any sort of debt money from the institutional source. It constituted around 20%, and customer finance, which is the major chunk of money, which constituted around 65% of the money. So let us understand the point number 2 and 3 in detail. Why this point number 2 and 3, where this customer money which was coming earlier, why it is not coming right now, and where the term loan institution money, whether it was coming right now or not coming. So let us understand the major chunk of money, which was the source, which was the customer finance money. Whether earlier it was around 65% to 70% of the project which was getting funded from the customer money. Why it was happening? This is the chart which is 2 years old, where this is the household income asset class distribution. This chart typically shows that in case if the household income has around 100 rupees of saving, where this 100 rupees of saving has been actually getting invested into. So you can see from the chart that real estate sector constituted the majority of the household saving, which is around 30% of the household saving. And it also stems from the fact that Indians by nature are conservative in nature, and they are not overboarding or anything as such. So as going by the conservative nature of them, so majority of the saving, it was going into the real estate sector. And the reason is also absolutely not deniable of the fact, because look at the CAGR. The return that I was getting in the real estate sector was around 7.2%, which is the appreciation which I was getting. Apart from that, I am also getting you can look at all the asset classes. So real estate was been consistently delivering the results to me. Now, for the end user to attract, there are two important things which are again important. One is the price to income ratio, and another is the rental yield to my cost of capital. Price to income ratio is basically how much income that I am generating and what is the cost price of the final asset. Generally, in case if I am launching a product for my customer whose income is 100 rupees, typically it has been decided that the cost of the final product of my house, it has to be around 4 to 5 times of my annual income. So you can see that in Saudi Arabia, the price to income ratio is around 2.85, but in India, it is around 11%, which is on an overall basis. But if you talk about all the major metros, which is the Delhi NCR metros and the Bombay, this 11 is increasing to around 25 to 28. This is where the price to income ratio is there. And then the rental yield in India is approximately around 2.5% to 3%, whereas the cost of capital is still hovering around 7% or so. So there cannot be so much of difference between the rental yield and the cost of capital for mine. So these are the two things. First of all, the rental yield is not increasing. My price to income ratio, it means the affordability factor is not coming in. And the return which I was getting around 5-6 years on a consistent basis, the appreciation price of the real estate has come down. So this is where the customer has not been there. The second important factor let us consider, which is also important for us, it is the bank money. Why the bank? What banks generally look at? If you look at what generally banks look at before funding the project, these are some of the parameters which are listed, some are not listed, but this is with my experience I can say that these are some of the parameters which are important. First of all, it is the equity. It has to be minimum bank generally considered as minimum 25% of the cost of the project. It can 25 to 40% of the cost of the project generally banks look at how much equity that the project has been bringing in. Before construction and before disbursement, all the necessary approval it should be in place. And IBC has made the banking funding a little bit complicated. It generally says that 100% of the collateral bank requires for the construction loan that the bank is giving for any of the project. It is apart from the project cash flows and also apart from the project security. There should not be any default reported in this last 3-4 years for any of the loan associated with the promoter or with the company that we are talking about. There is one more important thing in the banking sector when we are going and approaching for the loan. It is not only that what is reported, it is also that there should not be any adverse remark in the news, industry, graphicing about the promoter also which is there. The concerning fact about the banking loan was this: apart in case if you have measured or if you have followed all the guidelines of the bank project, also there is very few residential project that gets the BBB rating. It means and also the risk rating and also the credit. The bank has to put some aside some of the capital. So whether I am a A-rated company in the real estate, whether I am a say double A-rated company or I am a say BBB, my risk weightage is always standing as 100%. Whereas what was happening earlier was that earlier the banks used to fund the NBFCs where the risk weightage would come down to the 20% or 30% depending upon the rating of the NBFCs, and NBFCs used to then fund the developer. So what was convenient earlier was that the bank पहले NBFC को पैसा देता था, NBFC फिर उसको developer को पैसा दे देते थे. In the midway, the NBFC used to make around 4 to 5%, or depending upon the NBFC to NBFC, the margin used to be different. So what was enabling was that the risk weightage, in case if the bank is directly lending to the developer, it was around 100%, because the rating का कोई impact नहीं आता था. यदि बैंक directly यदि real estate developer को पैसा देता था. Whereas, in case if the bank is lending to the NBFC, and in case depending upon the rating of those NBFCs, there was an impact which was there. So this was going on for this next 3-4 years or so. But after this ILFS fiasco, when the NBFC also started in getting the money, so that is where the entire issues came along, the entire banking industry. That is, and after this IBC. So whatever the criteria that I have earlier mentioned, that these are the minimum criteria that the banks are funding. It is not like कि banks अभी पैसे नहीं दे रहे हैं. Banks are lending money, provided we can follow some 3-4 minimum norms, which is the equity norms, which is the collateral norms, and all the approval norms. And if there is a good track record for us, not good in case if you have an average track record also, I can assure you that we will have the good amount of money with us in terms of banks have started lending money. From last month onwards, the all the leading banks, if you talk about, there are only 6 or 7 PSU banks which has left. Out of 6 and 7 PSUs bank, I am sure of that at least 4 of them has given in principle approval to the residential real estate project. For at least 2 or 3 approvals of in principle approval has already taken place. So banks have started lending money to this sector. I will just touch base upon within a minute or so about the restructuring guidelines that the banks has presented. Banks, these are the restructuring guidelines where the QL by TNW, total debt to EBITDA, current ratio, average DSCR and DSCR. So there are the current ratio and DSCR. This may not be so much applicable to the real estate industry, because in the real estate industry, the current ratio may not be so much applicable because it is on a project to project basis. So RBI has come out with some sort of a changing mechanism. Earlier, all these ratios has to be complied on a corporate basis. Now Reserve Bank has come out and told that it has to be complied on a project basis. So for this is a good chance for all the developers that due to COVID, if there is any issue in terms of whether you have borrowed the money from an NBFC or from a bank, in case if there is any issue in concerning this ratio applicability and other thing, please let us know. We will try to resolve this matter and try to find out an answer for this. But this is the good time that all the developers start getting their house in order. And in case if there is any loan that has been borrowed either from the banks, again I am speaking either from the banks or from an NBFC, I think this is the right time for us that we get our house in order and we get our loan restructured. Again, just to summarize my presentation, for the customers to come in, the difference between the rental income and the cost of the funding borrowing, which is approximately around 5% right now, it has to come down to squeeze to around 2 to 3%. Thereafter, the customer sentiment will take place. For that, either the rental income has to go up, or the cost of the the finished product prices has to come up, or the income of the customer has to go down, or it has to come up. Banks have started lending money, and this Reserve Bank of India has come out with a fantastic guidelines in terms of restructuring and other things. I suppose we should take advantage of that. If there is anything else that I need to cover, Neetuji or anybody, you can just ask me anything for that. Thank you, Neetuji. I hand over the mic to you.
Okay, thank you so much, Jyoti Prakash, Gadia ji. I think that was a compelling case made by you, and Jyoti ji would be available offline for any further questions that you may have. Thank you, Jyoti ji. Thanks for your insights.
Thank you so much.
I now welcome Ms. Sigrid Zialcita, the CEO of Asia Pacific Real Estate Association. Sigrid has been at the helm of APREA, leading chapters across Asia Pacific. Sigrid is a recognized expert on global economic, public policy, and real estate issues. Before APREA, she served as a managing director of Asia Pacific Research for Cushman and Wakefield for many years. Sigrid shall be talking about the emerging markets. Over to you, Sigrid.
All right, thank you so much, Neetu. Good morning, everyone. And thank you for joining us today, day 2 of our live stream summit. I hope that you're enjoying it so far. So I do have a couple of slides that I'd like to show everyone for this morning. So if we can just have the first slide on the screen. Okay. So the market for real estate investments in Asia Pacific has boomed since the last financial crisis, as you can see on the chart here. But those in the emerging economies, with the exception of China, have not really kept up. Emerging market investments in Asia Pacific remains a tale of two sub-regions. The dominance of China, which accounts for over 95% of investments, and the rest of emerging Asia. Now, given the growth potential offered by these other emerging markets, including a sizable population base, real estate investments in those markets are set to rise. China, which is said to become the only major economy in the world today, I think, that will experience growth this year, remains dominated by domestic capital. Now, even in terms of cross-border source of capital, you can see on the right that it remains dominated by Hong Kong. And it's not a surprise because of Hong Kong's mainland ties and the predominance of mainland companies listed on the Hong Kong Stock Exchange. Now, in comparison, the rest of emerging Asia has a more varied investor base that you can see on the chart here on the right, but remains very underpenetrated, as you can see on the left. Okay. Now, if we move on to the next slide, this summit is all about opportunities, and that's what we came here for, right? To hear about the opportunities. And it's worth noting, by the way, that these opportunities in emerging economies will have to be individually assessed. Case in point is Thailand, for example. While it is still seen as an emerging market, Thailand has a population that is rapidly aging. Now, for the rest of emerging Asia, real estate regulations are still in the nascent stage of their modernization. India has a head start in this respect. Reforms that we've seen, particularly in the very successful implementation of the REIT framework, has set India apart from the rest of Asia. Additionally, the long-term structural drivers of emerging markets, like a rapidly growing middle class, massive infrastructure developments, what we've heard in this conference, favorable demographics, adoption of e-commerce, all of these factors remain intact. Now, on a sector basis, we've heard from our luminaries yesterday, and Anuj has actually reinforced it in his opening remarks a while ago, that offices will likely benefit from an upswing once this pandemic subsides. And this work from home could be temporary. It's looking to be transitory in many places. And that's because a lot of us are used to being in the office. And one other compelling reason I will have to add, that today, amidst tighter cash flow scenarios, companies are increasingly looking to increase their outsourcing to many of these emerging markets. And that's because a lot of these markets in emerging markets in this part of the world boast or offer talent availability and competitive wages. Now, the steady interest by institutional investors in the warehousing sector is also aiding the significant shift, right? Everyone today seems to like the warehouse asset. And it's also supported by the changing consumer buying behavior and preferences. Now, retail has suffered from this outbreak, but it remains a viable long-term investment. Why? Because of the strong consumption story that we're seeing and will continue to see. China, India, and ASEAN. And if we take ASEAN as a single entity, it's actually the three are said to be among the largest economies in the world starting 2030. Okay. And this plethora of opportunities is certainly stoking many of the governments across Asia Pacific. We're in dialogues with them, and they're all now very eager to put in place a regulatory framework. So we in APREA are working hard to make sure that they have the information to use even India as a successful case study that emerging ASEAN can emulate when it comes to having a REIT regime, leveraging on these positive trends I've shown you here to drive urbanization and economic growth. And let me just add here and end, actually, that India is one of the countries where real estate investments is said to be higher. This has been a point of discussion in terms of the foreign investments. But there's a lot of indicators that show that foreign investments could actually go up. Okay, we know how important they are. They have helped to power the development of Indian real estate. But there's also a lot of positive factors, market dynamics that will continue to lure them to come to India. And we thank the government, the Indian government, for being a fantastic partner through setting conducive policies, for the real estate sector, for the players to thrive, for a successful REIT regime. And we believe that India can emerge as the leader for emerging market real estate in the new decade. Thank you.
Thank you, Sigrid. That was wonderful. Thank you for creating a compelling story for India and the underlying growth demographics. In fact, India has indeed set a benchmark by having separate regulations for real estate investment trusts and infrastructure investment trusts. Thank you so much, Sigrid. Do stay on for the rest of the sessions.